G'day, it's Simon and Crystal here from Pumped on Property, and welcome back to another monthly market update where we're going to break down some of the information from Australia's leading property market experts. I think we'll dive straight into it to talk through the information, the data that's come out from CoreLogic, where we've seen 5 out of 8 capital cities rise in value over the month of November. So Crystal, what are the growth rates looking like around the country at the moment?
Yeah, so 5 of the 8 capital cities are performing really well at the moment. Nationally, home values were up 0.6% according to CoreLogic for the month of November, which is actually the smallest monthly gain since February this year. Despite that slowdown though, there are some clear front runners in that mix. And we'll break down exactly what Tim Lawless from CoreLogic is saying at the moment. So after falling from a 7.5% peak in April 2022 to a trough in January 2023, housing values have bounced back 8.3% higher over the past 10 months, demonstrating a clear V-shaped recovery. Whilst there has been some slowdown in the market, Perth, Brisbane and Adelaide are leading the way in terms of the capital cities performing the strongest right now. So Perth posting the largest monthly gain since March 2021 at 1.9%, Brisbane performing at 1.3% in November and Adelaide at 1.2%, which is some great performance for those 3 markets. And the reason we're seeing that is because Tim Lawless has said that these 3 cities are continuing to show remarkably low levels of advertised supply while buyer demand is quite high. And just from our perspective in terms of the types of people we're competing with on the in the market on the ground, we are seeing listings continuing to be low and buyer demand is actually really high for this time of the year. Typically we do start to see December taper off, but we're still seeing pretty high levels of competition, at least here in Brisbane.
Which is interesting as well, because what we've noticed since, I guess, COVID, like pre-COVID, you know, you had a seasonal cycle where you would generally see listings pick up in the spring selling season, but then you would see that drop off in summer over December and January when people are typically taking holidays. But that hasn't necessarily been the case for the last few years. You know, December and January have been quite strong months, but obviously it's just the beginning of December now, so we'll have to wait and see how things pan out over the next couple of months. Yeah,
definitely. It's interesting to see, but just reflecting back on November, according to CoreLogic, we'll go through state by state performance.
Let's go.
Sydney was up 0.3% through November. Melbourne recorded a decline at negative 0.1%. Hobart recorded a decline of 0.1%. Darwin recorded a decline of 0.3%, Canberra up 0.5%, which puts the combined capitals up at 0.6% and the combined regional market also up at 0.6%. So some really interesting stuff out of CoreLogic there.
A bit of a rebound in regional. I know regional's been struggling a little bit behind metro markets recently, so it's good to see that they're starting to see a bit of a pick back up now as well.
Just to continue on with some of the stuff that Tim Lawless is saying, essentially the more expensive end of the market tends to lead the cycles in these cities. As borrowing capacity reduces, we may be seeing more demand deflected towards lower housing price points, with the broad middle of the market now recording the strongest rate of growth in Sydney and Melbourne. And again, what we're seeing in the market, the entry-level price point in Brisbane is seeing some insane heat right now, just because the average buyer having a reduced buying capacity or borrowing capacity is really driving into that kind of entry-level $650 to $850 price point. And I'm sure it's much the same around Sydney and Melbourne. It's going crazy at that sort of entry to mid-level.
And that's why, you know, Brisbane, Perth, Adelaide are all performing quite well at the moment, because the median house price in these markets is a little bit lower. And, you know, that means that there's more affordable properties, more affordable supply in the market. So if that's all you can afford, you know, they're 3 really big markets with strong historic growth levels. So obviously things are still moving in a really positive direction in most markets, but obviously there's some top performers at the moment.
So that's the main things coming out of CoreLogic at the moment. What have we got to see coming out of CBA and some of the banks?
Yeah, so CBA, obviously the RBA has left the cash rate at 4.35%. They met in December. I think a couple of days ago, as widely expected is what CBA. So the board has left their forward guidance unchanged from last month, whether further tightening of monetary policy is required to ensure that inflation returns to target in a reasonable time frame will depend upon the data and the evolving assessment of risk. Now, CBA don't anticipate any further increases in the cash rate. They do acknowledge the near-term risk sits with another potential 25 basis point rate hike at the next board meeting on the 6th of February in 2024. So mixed reviews there. I know prior they were expecting that to go up, but now with the inflationary data coming out, it's looking like they'll probably hold it there. Now, CBA's central scenario sees the RBA commence an easing cycle in September of 2024. So there is a light at the end of the tunnel. Now, they went into another article where they broke down 11 different factors. I've sort of pulled a few little bits and pieces out of there, not all 11. But the first one was about building approvals, which fell by 4.6% over the month, with the level of approvals around decade lows.
Yeah.
This isn't a good thing because we need more building activity. We need more building approvals to increase the supply, because right now the reason we're seeing such a spike in property prices is because of the low supply and the high demand. And also, to fuel the fire, the value of new housing lending, excluding refinancing, rose by 0.6% in September. By state, overall lending growth was strongest in New South Wales, up 3%, followed by Victoria, up 2.7%. Through the year, WA's 18.3% is the only state with higher flow of new housing lending. Nationally, investor lending is proving stronger than owner-occupied lending, but there was some variation on a state-by-state basis. So obviously people are trying to get into the market.
Yep.
And you know, it's working in some places, but it's really challenging in other. Obviously there's some government incentives coming in the new year that are going to make it a little bit easier for some first home buyers to get into the market. What we generally find from these things is that it actually spikes house prices even higher. So I'll have to wait and see what happens there. So obviously they also went in to say that the A capital city dwelling price index rose 0.9% in the month of October. So this is taken it back a little bit. We've just gone through the November update there where they continued to rise, but at 0.6%.
Yep.
Now on the rental side of things, rents continued to rise briskly across much of the country. In October, the A capital city index rose 0.8% per month to be 9.7% higher through the year. So rents are still increasing. And if you haven't already listened to our 2024 property market predictions, we talk about some of the experts and analysts' expectations for the Australian property market in 2024, and we also talk about rents where they do expect those to continue to rise. Now, the labour force survey was somewhat a mixed bag, with strong employment growth combined with a rise in the unemployment rate. A little bit confusing there, but that's what happened. So WA saw the largest tick up in unemployment to 3.8%, then followed by Queensland up to 4.3% and Victoria up 3.8%. So there were modest changes in New South Wales, but it's at 3.4%. So still below the historic norm. And this rate rising cycle, one of the goals was to increase that unemployment rate, because as that unemployment rate rises, people don't have as much money to spend, which supports reducing inflation. Now, this one's an interesting one. Despite the property market rising, despite the stock market rising, despite commodities markets rising, consumer sentiment remains in the doldrums nationally across all the states. New South Wales currently has the highest sentiment on a 3-month moving average basis at just 83.6%. Queensland is the lowest at 78.1%. Now, you want that number to be sitting up at around about 100. These numbers between sort of 70 to 80 is similar to what we were seeing back during the global financial crisis. So people are feeling pretty average about the economy at the market. And when you talk to the average person, like, you know, when I go to the coffee shop, when I go get my hair cut at the barbers, when I talk to some of my mates at the surf club, the average person does feel pretty bad about the economy at the moment. So it's understandable that consumer sentiment is dropping at the moment. And finally, wages were up 1.3% over the quarter, which is the strongest in the 26-year history of wage price index. So that's a good thing to see that wages are going up. It supports it helps with inflation, it helps with higher interest rates, but obviously 1.3% over the quarter. Yes, still high, the highest over the last 26 years, but it's still nothing in comparison to inflation and rental growth and property prices and things like that. So bit of a mixed bag of information coming out there from CBA.
Yeah, love to see it. It's good to take a dive into what the banks are seeing, feeling, these state of state reports. Just give us a good indication into what's going on behind the scenes with lending, with sentiment, everything like that. So yeah, I love it.
So next up, we've got SQM, where they've broken down the listing activity around the country. Bit of a mixed bag going on there as well. Could you please break that down, Chris?
So SQM has recorded some key points, which I'll dive into in detail in a moment. But essentially in November, the number of national residential property listings increased slightly by 1.6%, rising to 247,062 dwellings on the market. And that's up from 243,221 recorded in October. Nationally, new listings rose by 1% in November, and distressed property listings fell by 1% after the surge recorded in October. So that's really good to see. The combined dwelling asking prices remained steady at $805,712. So it's really good to see those distressed listings coming down, but I'll dive into exactly state by state monthly change and the yearly change of those new listings and those distressed listings. So bear with me.
Let's get into it.
As I get into it. Sydney was down 2.7% for the month of November. Melbourne was down 2.2%. Brisbane was up 3.2%. Perth was up 4.7%, and Adelaide was up 4.8%. So that's the change in new listings for the month of November for those 5 capital cities. When we compare it to the yearly change in percent, Sydney was up 17.5%, Melbourne was up 14.2%, Brisbane was up 4.9%, Perth was down 5.1%, and Adelaide was down 0.4%. So there's a big difference between what's going on month to month and what's going on yearly. And as we can see, those markets that are performing the strongest right now, that supply is severely low right now, declining in terms of this time last year.
Okay, yeah, interesting. What's it saying on the distressed listing side of things? Because I find this to be one of the more important data pieces to look at, because it gives us an understanding as to, who's feeling the pinch from the higher interest rates at the moment. And let's go into all of the states on this one.
Most definitely. So SQM said here that the decrease of 1% compared to the distressed listings in October have been recorded, though Western Australia and Queensland continue to record substantial declines in distressed selling activity. So we'll dive into state by state here in terms of the current monthly change in the distressed listings, and then we'll go into the yearly. New South Wales is up 4.5% for distressed listings in November. Victoria is up 11.5% for distressed listings. The rest of the states are down. So Queensland is down 4.9%. WA is down 9.4%. South Australia is down 1.7%. ACT is down 29.6%. The Northern Territory is down 3.5%, and Tasmania is down 2.1%. So the monthly change is at 1% as well for distressed listings. But as you can see there, increasing in New South Wales and Victoria and decreasing substantially across some other states.
It's interesting because I think I remember from last month in October, ACT's distressed listings was up like 35%, and now it's down 29%. 29%. That's just really interesting. It's sort of swinging massively one way and then the other.
Yeah, totally.
What about over the year? Because that gives us a more accurate understanding, because obviously this time last year, interest rates were nowhere near as high as they are right now.
Most definitely. So the yearly change in distress listings is interesting. They're down 0.4% in New South Wales. In Victoria, they're up 25.5%. In Victoria, wow. Queensland, they're down 29.4%. WA, they're down 34.1%. South Australia, they're down 19.2%. The ACT, they're down 13.6%. The Northern Territory, they're up by 10.1%, and Tasmania, they're up by 28.4%. So the yearly change for the national distress listings is down 16.5%.
Okay, yeah, which is interesting because we've been talking about this mortgage rate cliff, and like clearly the data tells a different story to the narrative in the media at the moment. And I hope people are starting to find the interesting points in this. Like you look at the data coming out from SQM and you compare that to CoreLogic and CBA, and the markets where listings are down, distress listings are down, supply is down, they're seeing the largest increase in property prices. So we know that the main driver for growth in assets is supply and demand.
Yep.
So it's really interesting to see. And, I wanted to go into some information from Michael Matusik. He recently wrote his last piece for 2023. It was mostly based on the population growth sort of statistics. So I might just dive straight into it. Yep. He goes into Big Australia, and the ABS has released new population forecasts calibrated from 2022, and this suggests that Australia's population could grow between 3.7 million and 4.6 million people over the next 10 years.
Wow. This
would see between 30.2 million and 31.2 million people would call Australia home. So as of mid-2023, there's 26.4 million people that live in Australia. As of late November 2023, about 26.9 million people live here. So huge increases in the population growth rates. Now, what he went in to say is the spread of this is 30% of our population is born overseas. This will lift to 33% by 2033. It was 27% 10 years ago. Now, to sort of educate you on how Australia is growing right now, there's one birth every 1 minute and 42 seconds. There's one death every 2 minutes and 52 seconds. There's one person arriving to live in Australia every 42 seconds, and one Australian resident leaving to live overseas every 2 minutes and 30 seconds. So an overall total population increase of one person every 47 seconds.
It's crazy when you look at it like that, hey?
It really is. Now, Michael went on to say that he believes that we should be making plans to host 50 million residents by 2050 and 100 million residents by 2100. So obviously with Australia being a very safe place to live, and we've got a great government, we've got a great banking system, we've got an amazing climate, we've got great employment opportunities, I can see these come into fruition quite easily. Now, his housing outlook went on to say exactly what I just did. Real estate is all about supply and demand. Demand, i.e. sales, is steady when compared to the past 10-year average. So the amount of people purchasing properties is the same now as it was over the last 10 years. While supply, stock listed for sale, is down some 20% against a long-term trend. So obviously demand is outweighing supply at the moment. We also have an undersupply of rental stock and new builds, and unless things go really pear-shaped, Australian housing values are likely to rise during 2024 and 2025. Now, I didn't have this article before when we recorded our 2024 property market predictions, but now we can add on to that. Michael Matusik, one of Australia's bears, is predicting property prices to rise in 2024 and 2025, which is in alignment with every other analyst out there.
I love it. Some great things coming out of SQM, CoreLogic, CBA, obviously with rates holding steady, the supply down massively. It's only going to continue to add to, like we've already said in the 2024 predictions, what is to come hopefully through 2024 and 2025. But hopefully you guys have enjoyed our December market update, the last one for 2023. Have a great Chrissy, have a great new year, and we'll be back in January with some more interesting data. It'd be interesting to see what unfolds in the next month or so.
Woo, that's a wrap.
That's a wrap.
That's cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.